Welcome to the IDEEA Podcast, a channel for the IDEEA Hospitality Investment Forum, which is an annual gathering for the hospitality investment community in Eastern Europe. Tune in to insightful conversations between the IDEEA team and hospitality investment leaders and innovators across Europe. And now, let's dive right into today's episode.
Hello everyone, we're here today with IDEEA Podcast. On September 26-27 in Grand Hyatt Athens in Greece, we will be having IDEEA Hospitality Investment Conference, and today we will be announcing one of our speakers, David Nath, he's head of Hospitality CEE and SEE from Cushman Wakefield, and we're going to discuss with David a little bit what is happening on the investment and development market in this region ahead of Athens conference. David, welcome. It's a pleasure to have you here.
Likewise. Thank you for inviting me, Marina. Good morning.
How are you?
Very good, very good. After a short summer break, so fully energized. So looking forward for Athens, of course, and looking forward for moderating my panel and my panelists as well. So thanks very much for the invitation.
David, I'll just use this opportunity to do a little bit of promotion and ask you where you have been for your vacations.
So as I'm coming from a CEE and I'm based in Prague, and as I have naturally a very tight bonds from my childhood with Croatia, I went again to Croatia, this time to Savudrija, to enjoy a beautiful resort, Kempinski Resort by MK Group. So that was my place during the summer. So returning a little bit to the hoteliers in our region.
That's nice. David, well, you enjoyed the vacation, I would assume, right?
Yes. Everything was great.
It's nice that actually, since we started talking about Croatia, I wanted to ask, and you are also responsible for this region within Cushman Wakefield. I wanted to ask you, what is the greatest challenge in hospitality and change that you saw within investments in the past 6 months?
Thank you. Yeah, so I have to say we are living in a very dynamic world at the moment, like from the economical perspective, and I have to say that actually hospitality investors are similar to like any other investors and are of course human beings by nature, and historically it is proven that the human beings are afraid of a fear. And these days, recent weeks and months, unfortunately, are showing us that we are surrounded by the fear. And every chairman of the investment board do, of course, care about the recent worrying news. And, those are, that we are very close to the war, which is ongoing. There is a China military escalation towards the Taiwan. Energy prices are at the peak. So these and many more are, of course, influencing the investment market in general. Contrary to that, we see as well that the market is so dynamic that actually the situations are changing every week. So if you ask me what's happened, in the last 6 months, I can say that it went from the bright blue to dark times, and again going to the sunny horizon. For instance, last week, there was, for example, the greatest week on the stock exchange market, Shanghai market grown 1.32%, NASDAQ, by 2.93 in US. And due to that, investors pumped into the global economy and global exchange market, actually, one of the biggest lump sum in the past 2 months, for instance. So in US, it was almost $11 billion. Which is quite extraordinary amount, given the current dynamic. So of course, inflation growth was lower, for example, in US than expected, and therefore there is a hope that Fed will not substantially increase in September the interest rates, which should a little bit cool down the situation when it comes to the inflation, and generally on the market just bring a little bit of more confidence. So these positive news are out there, but also signs that there are investors are very cautious about the long-term investments, but rather short-term investments. So they are more confident in doing the short-term investments rather than the long-term investments. And the threat of recession is there, but banks are in a great conditions. We see that unemployment rates are very low. So, central bankers are already experienced from the global financial crisis. So they are ready to pump the money into the economics and into the markets to fight against the recession. So these all, signs and positive signs are just, creating the factor that, the investment sentiments towards the real estate market and the hospitality investment market is very positive from the long-term perspective. It's proven that the investment in a real estate actually brings the lowest value deviation on the long-term perspective. And that's why the investors are more confident by lacking the stock exchange market to move into our real estate investment market. Hospitality investors are, even more interesting because they are from the inflation perspective ready to consider investment into the hotel sector as they see that the connection to the revenue of the hotels are able to fight against the inflation in general. And that's why depending on the tenancy structure and structure of the operating agreements, they can see that they can just somehow fight against the inflation. So that's why investors are selecting actually the hotel real estate, and the inflation is helping that factor. So, but the fact is that there is 10 times more equity than during global financial crisis. But recently we noticed that there is 8 times less amount of buyers on the market and the lowest number of the sellers in the 10 years history. That's a pure fact.
And do you think that this is the sentiment that will remain? Because pre-pandemic, we actually had most of the investors looking at the city hotels. Now we see great increase of interest in leisure market. Do you think this is going to stay, or will that be balanced in some time in the future? I know no one can predict future, so you can't either. But do you see that they're actually even for the long-term investments looking to stay in this leisure market and not going back to the city, or you think that the city will pick up at some point?
Absolutely. No worries about that. It's just only that the investors, as I said, are very much wait and see mode at the moment, and they are just considering on the very short term period what is the right way to go. It's unfortunately a time where you can't really predict what will happen in 2 months going forward, and that's why they need to adjust very quickly. So I'm sure that the urban destinations will again return back. We can see already, in second half of 2022 that there are a lot of discrete talks already between the sellers and the buyers in our region, in urban destinations. For example, 1 year ago, it was just only about, us receiving the calls of investors and being directed towards finding the new attractive destinations in the resort classifications. So these days we can see that the shift is there. For example, we can see it on the latest STR numbers in our region. You can see that Prague is booming when it comes to the RevPAR. Budapest, Warsaw is reinforcing their positions as well. It looks like that they will be returning back even sooner than expected when it comes to 2019 KPIs, according to the STR. So we can see that, the market is rehabilitating very quickly, and that all brings the confidence of the investors that they will again relocate back to the urban destinations. In terms of classifications, we can see now that the investors are focusing more on the luxury and economy sector. So it's understandable because luxury is a certain niche in the urban destinations, and we can see that they feel that there is still some gap which they can fill in and which they can bring some operators, which are not existent yet. So those are more opportunistic investors. Economy, of course, because economy was always proven as a great investment article, like low cost of operation, high profit margins, fast returns, and so on. Whereof upscale, mid-scale products, especially the ones which are focused on MICE, are the ones which are lacking a little bit behind at the moment. But that all is changing very rapidly, and we can see that it's changing almost on a weekly basis at the moment.
David, you said also that the investors would approach you to reach or to find new destinations. So can you tell us, maybe a couple of deals that you've done and that where you actually entered completely new destinations in the region?
So I would not say it's a completely new destinations. I would say it's already well-established destinations. It's true that the investors are still cautious when it comes to like a resort destination. It's a new kind of a product for them. So they will rather choose well-established assets on the market, and they will just rather proceed in that rather than to develop, for example, the new destinations. We have seen mainly in Croatia, where we are introducing a couple of investment opportunities of the bigger scale in well-established destinations, that actually investors are more inclining towards the existing operations rather than the developments. It's very natural and it's very understandable given what is happening with the construction costs, uncertainty when it comes to the permitting processes, and so on and so on. So I would say at the moment prevails well-established locations, and if impossible, you can either choose the, let's say, sale and leaseback structure. That's even more interesting, because what we can see is that even private equity investors, because of lack of investment opportunities and because an amount of equity which they raised for post-pandemic acquisitions, they were not able and succeed to deploy this capital, and they are opening the core funds even within as a private equity investor, so which is quite unique, and they are fighting against actually the well-established core institutional investors. So it shows that actually the pool of the core buyers, even for resort destination, if the proper sustainable and highly covenant blue chip tenant is in place, can work very well.
Well, for that reason, I really hope that those couple of deals that you do have in Croatia will end up very successful. David, regarding the operators, what do you see the change in maybe the contracts, the terms? Do they have any challenges on the market now? Because we still see quite lots of brands coming up, new ones, but we also, as you mentioned, the service department sector, that's a completely new area that developed strongly during the pandemic, and in this region, especially being connected to leisure market, it really developed strongly. So, what about the operators? How are they dealing with this situation now?
So, I will answer in twofold. So, one question when it comes to what is new in the operational sentiment, or operator sentiment. So they of course are trying to implement towards the recent situation on the market. I think it's worked very well both ways, because pre-pandemic, of course, the owners, landlords, in case of a lease contract, were not ready for such situation which is happening now. So that's why post-pandemic, we can see that in the lease contracts there are many of the pandemic clauses which are protecting the operator as well as the owner. So it's also somehow establishing the correct working platform based on which the operators and the owners can work on in case of another pandemic situation is happening. So, for example, a shift towards the variable lease or a shift towards the hybrid lease. So there are certain positions which are working like that. There is a possibility of shortening the agreements. There is a shortening or diminishing a certain amount of the fixed component of the lease and extending the lease term and so on and so on. So I would say the operators are acting very pragmatically, and they are trying to more precise the contractual situation with the landlords, and trying to prevent that there will be this kind of a misunderstanding on both ways in case another pandemic situation will arise. On the management agreements, we see, of course, that when it comes to the forecasting and presenting the budgets, the owners needs to be following the certain market trends and be understandable to the force majeure situations. So I would say the major trends is following this way. So to protect both actually the owner and the manager / landlord and the lessee. On the other side, what we see that operators are extremely hungry for the new opportunities in previously well-established destinations where they were not able to penetrate the market, because first, there were independent owners which were not using any brands, and they were very confident because the market were strong. So they are using the time of the post-pandemic situation, and the owners being tired of operating on their own and being only dependent on the domestic market, so that they will employ or engage the manager who will enhance the sale potential of their product or hotel towards the international sphere. And secondly, of course, some operators, were not managing the situation very well during the pandemic situation. And of course, there are some winners and some losers in our industry, and therefore actually they are scouting for these kind of assets and opportunities and trying to replace the managers which were not behaving well towards the owners during the pandemic crisis. So this is actually like more on the operator or operational sentiment. And the second question, was more towards
the service departments element.
Service departments. Yes, you are absolutely right. So as hotels were very, very kind of impacted, during the pandemic restrictions, the service departments were somehow allowed to operate. They were somehow able to still attract the customers, and the quarantine workers, or actually the corporate clientele which were seeking for accommodations where the hotels were fully closed, and so on, enabled the hotel owners to potentially think of changing the concept from hotel to the service departments where possible and where the asset was decently big, so that they can do such conversion. And there are some couple of hotel player or service department players which were using the post-pandemic situation for their substantial growth. Such as Numa Stays or the Julius from Julius Meinl, or Sonder, and so on. So those are the new players which are clearly, let's say, the winners of the opportunity for future growth. And for them, the pandemic crisis were definitely, the substance for growth going forward.
Do you think there will be the new disruptors on the market? I mean, we had the online agencies that disrupted a couple of years ago. Then we had Airbnb. Do you think that this now is going to be something that will additionally interrupt the hospitality market, or do you think also that many hoteliers will actually, and hotel operators will go also towards this service department sector?
I think it shows very clearly that a typical hotel establishments on their own, as we used to know from the pre-pandemic times, will need to adapt and change post-pandemic.
Don't say anything more. We'll talk about more of this at IDEEA, because I know this is such an interesting topic. I have just one last question. ESG. It's always, now everyone talks about ESG, but on one of your recent posts on LinkedIn, you actually said the hotels are more interested into investing into properties that have some kind of ESG credentials. So what kind of credentials, what are they looking for? What do you see they're doing, especially in the region where, the new things that start in the Western Europe, they come here a little bit, or a couple of years later. Maybe this is not the situation in this case, but I would love to know, so what are actually hoteliers doing regarding ESG and sustainability, and how the investors and operators are encouraging each other to do more in order to be just more sustainable?
Yeah, it's not only about the E, so being environmental and responsible, sustainable, but it's also about the social and governance, so S&G as well. So I would say there are three areas for them to improve, so to say, and we cannot further as a hotel industry blind our eyes and saying it's something which is more related to other commercial real estate, because unfortunately we, due to the long period of time, by pretending that this belongs to some others and this is someone else's problem than ours, become the black sheep in ESG. So the hotels are very heavy on the carbon production, and they need to really start to work on adapting on the situation. Unfortunately or fortunately, the macroeconomic situation and the increase of the energy costs and the dependency on the Russian oil and gas, that all started to spin the wheels of this kind of adaptations even faster than we thought we will be undergoing. So actually, you see that the trend is going very quick. There is a adaptation of the European legislation which will go across the entire European Union, no matter what. But if you are part of European Union, you need to adapt to it, and it will start already by the energy certificate sheets attached and glued on each of the asset, including hotels, as of next year. So it's there, it's happening, and we will need to follow that up, and it will be more and more in an eye and a focus of not only investors but also the banks. So if you want as a hotel owner to go and in future just withdraw the debt on your asset, you will be questioned when it comes to your ESG activities, as well as if you are investor and you are underwriting any investment opportunities. The first question you will be looking at is how dependent is the asset on energy, and how it is fulfilling the ESG norms. So that will be something which will be
saying this in future tense. When do you think this will start happening? When the banks and the financial institutions will actually come and say, okay, guys, you really need to have this in order for us to look at your deal?
Yeah, so we can see already by now, for example, on core investors or institutional investors, that they are very cautious about investing into the assets now, to acquire demanding or energy demanding assets, which does not have any kind of a future pattern to become carbon zero. So we can see that ESG is implemented as of now for these big institutions. On the opportunistic investors, we can see that they are still willing to acquire the assets which has some further pattern to go towards being carbon zero or carbon neutral, and they are looking more into it in the sense that they will provide a discount because of the future capex which needs to be invested into these hotel assets to become neutral and ESG friendly. And so the owner, the seller, is diminished by that factor, that he did not improve his asset to be fully compliant with ESG factors as of today. And these opportunistic investors will use the finance and equity to become ESG friendly, and then after will go to the institutional sphere, and then will sell the assets which is fully stabilized from the operational perspective, and is also able to be called as a carbon zero, carbon neutral, which the institutional investors will appreciate by the more compressed yields upon the acquisition. So it's happening already by now. The banks are already asking for the ESG reports. They're asking already for the energy sheets and the information when it comes to the carbon demand. So it's not proven yet because even the banking sector is getting used to it and how to implicate, let's say, in a risk profile of the asset, the ESG dependency and also the necessity for becoming ESG neutral. So I cannot tell you at the moment, what is the premium on top of not being ESG friendly, so to say, but actually it's already happening by now. So the field is prepared and the ground is there. So.
Well, that is good. I think we can just go on and on for a couple of hours like this, but I think now we have to stop because we still have an event in September that we need to keep something for that. I just want to mention two things. So we will have two sustainability or ESG sessions, both one focused on real estate, another focused on operations. So we're really going to look at what hotels can do in order to follow this path, to become more energy efficient, but also implementing all the ESG credentials. But I also wanted to mention, David, you will be moderating a session called Location Concept and Operating Culture Flexibility, what key players are doing to keep leading the game. And that's on Monday, the September 26th, right before the lunch. So I know this is going to be a very interesting session with top brands talking on how they're delivering their promises and how they see the future. David, thank you very much for this. I'm really looking forward to seeing you in Athens in a couple of weeks.
Likewise. Thank you, Marina, for invitation, and looking forward to see you in Athens. And of course, all my business partners and friends from the hospitality industry.
Perfect. Thank you, David. I'll see you soon.
Thank you. Likewise. Bye-bye.
Bye.
Thank you for listening to the IDEEA Podcast, the channel for the IDEEA Hospitality Investment Forum. You can find a full transcript of this conversation in the content library on idea-forum.com with other reports and insights. We look forward to welcoming you and your colleagues in person at IDEEA in Athens, Greece on the 26th through 27th of September 2022. If you haven't registered yet, please go to idea-forum.com to purchase your pass today and save before ticket prices increase. Please feel free to email us with any questions at hello@thebench.com. Until the next episode, stay safe and keep well. Bye-bye for now.